Hey everybody, it's Andy Swan, Landon Swan, Megan Brantley here with kind of a special Thanksgiving episode of LikeFolio Podcast / video. Last time was such a hit with our 3 stocks in October that we picked. We thought we'd do it again this time because why not stick with a winning formula?
And we've got the slide that shows how each one of them did.
Yeah.
Megan included this slide. Coincidentally, her stock did the best.
Yeah, Megan picked Adobe. Andy picked SoFi. Landon picked Altria Group. They've all done well. SoFi up 12% at its maximum peak. I thought it was going to run from there. It's pulled back significantly. That's, again, a longer-term play. Altria, steady as she goes, up and to the right, which is good, plus paying a dividend.
That's right.
Mm-hmm. And Adobe, Megan's dominating all of us with a current gain of 8%. You could have gotten 16% in a month since then, so that's a pretty good start.
She hit the bottom there or what? That was awesome.
That I like these charts though, because I think it shows this is just a 1 month update.
Yeah.
I don't think any of these are played out.
Right. No,
definitely not. No, we're all still bullish on all 3.
Yeah. All 3 of those still look good. But we've got 3 more today. I'll start off with my pick for this kind of Thanksgiving time. This is going to be a controversial one, Coinbase, because, as you guys know, the entire crypto world's in a complete meltdown right now. FTX has just gone bankrupt. It was a total scam, pretty much, is what we're finding out. A lot of cryptos being found out to be a total scam. And I actually think counterintuitively that works in Coinbase's favor because it is a regulated U.S. entity that trades on, U.S. stock exchanges, has those reporting requirements. They necessarily keep client funds separate from company funds, which I think is like business 101, but apparently not everybody was doing that.
Right.
And so I think Coinbase could be, the kind of the flight to quality play here in terms of where I'm going to have my account if I'm interested in getting invested in crypto. Megan, I think you brought up a chart here that shows that that's starting to happen already.
Yeah, whenever you said Coinbase, that's what I'm going with. We're looking at these charts and you see this activity on the far side of this chart. We actually dive in when we see activity like that because that's a pretty steep uptick in mentions and people talking about using Coinbase. And when you look at the actual tweets themselves, it was exactly what you're saying. It was people saying, this is something I trust because it feels more regulated. Yep. And so that long-term is very good for Coinbase.
Yeah, I think it could be if and when there is another crypto wave, it could be an even larger market share winner. And we see some signs that there could be, there's some signs of life in the crypto space. It's not just all doom and gloom. There are some people looking to take advantage of, significantly lower prices on a lot of these things and less interest overall, both in terms of people talking about being investing in crypto, and trading crypto. Both of those, I think Coinbase is a natural leader, and it will do well. Plus, I love the fact that this was a $250 stock at the beginning of the year, and now you can get it for under $45. So, a lot of the risk, I think, has been taken off the table. Of course, all of these can go to zero, so there's always 100% loss available. This is a highly speculative play, but I think long-term, Coinbase is going to emerge as the winner of all of the scandal.
I like it. It's basically like a Black Friday sale. Stock's 80% off,
Yeah. So is Bitcoin.
Exactly. Yeah. But actually, this is good ammunition for the dinner table at Thanksgiving because there's the guy who last year was like, you got to be in Bitcoin. We're helping you out. So you have some talking points about why maybe things aren't doom and gloom. It's not all ending. Now I tell your family to get into Coinbase. I'm sure they'll trust you this year.
Yeah, right. So that's mine, Coinbase, under 45. I like it. I think, we could be looking back 4 or 5 years from now and this be 5 to 10 times higher than what it is today.
I love it. So the next one is my pick for this month, and it's Pinterest. And this is one we've hammered home before and benefited very handsomely before. And it has since pulled back just because of how usage has changed post-pandemic. But I think it's interesting because we're starting to see signs of momentum building again. So the company has new leadership. It's got a new CEO that actually from Google and has experience at PayPal, if you can see kind of where the company's head is at there.
Yep.
And you can see it's expanding and building upon its global unique audience. And this really started to happen in August. So just over the last 3 months, you can see a pretty significant uptick versus the trajectory that we had previously been reporting post-pandemic.
Yep.
And one thing that they're doing really well, they're improving their algorithm. They're keeping users engaged. And I think another thing that they're doing really well is this is almost like that common sense check to me of it makes sense that a user would go to Pinterest to search for something, come across an ad and not even recognize it as an ad.
Right.
In fact, like they would want that ad because they're seeking it. They're seeking ideas. They're seeking things that they can buy, things that they can do. And so Pinterest is getting really good at monetization. If you look at their compound annual growth rate from 2019 to 2022, that user growth rate is 11%, but that revenue growth rate is 35%.
Oh, man, that's a big
So
deal. Yeah.
Wow. Yeah.
they're growing their monetization faster than they are their user base.
Yeah.
And
They're monetizing each user more and more. Is that
Correct.
because they're offering that, the ability to just purchase and shop right inside the platform? Is that a big driver?
it is, and they're doing a really good job with their video content. That's one thing that they're seeing driving engagement, especially among younger users, and help connect brands with that kind of emerging audience of people who are shopping around. And it kind of reminds me of a common theme that I know we've all talked about is, never bet against the suburban mom.
Yes.
This
Right.
is like the quintessential, I think, example of that. So it's definitely interesting to see. I think that it's also trading at levels below where it was when it IPO'd, 2019.
Wow.
Yeah, that's great. And you look at the stock portion of that on the gray,
Yeah.
the gray line, it does look like the kind of thing you would see, maybe a reversal is in place here because the stock market hasn't performed that well, but Pinterest, it looks like in the summer found a bottom and is now built consecutive higher lows off of that. It's kind of thing you like to see after a major downtrend. So I like it. Under $30? Are we under 25 still?
I think we're hovering around 24 right now.
Yeah.
So
I like it.
Well, that's a great looking chart. That one especially.
Yeah.
So my stock, when we first talked about this, I was thinking coin, and Andy
Stole
claimed it basically.
snooze, you lose.
Yeah, he jumped on that one. So I do like that one, just like Andy, all the arguments that Andy put out. I was also looking at McDonald's, but since I went Altria last month, I didn't want to go double conservative, so we got to get a little more aggressive here. So I'm looking at Hims. I really like this company. They sell like prescriptions, hair loss, fake Viagra, generic Viagra, other kind of pills, things like that. And it's for
Skincare, like
skincare.
acne.
And they have women's stuff too. It's not just Hims. They probably regret the name because it's Hims and Hers now. But what I really like about this company is that it feels like they're about to turn the corner. And when you look at how many people this is how many people are going to their website on a monthly basis, the green bars, and then the circles are their revenue. So it's tracking really well. Everything's up and to the right. They're doing very well on that. But they're not priced like a growth company right now because growth companies have been just smashed, right? So it's almost like the market is discounting them and saying, we don't think you're going to make it. So this is a little bit more of an aggressive play. And when you look at some of the numbers, I mean, their revenue is just steadily growing. It's like around 80% growth every year. Their margins are very high, gross margins, 76%. They're losing a lot of money because of mostly advertising. They do a lot of marketing, a lot of spending, but they're building recurring revenue with that. They're creating customers that are going to keep coming back. So they're losing around $70 million and they have about $200 in cash. So, they've got about a 3-year runway, but I think that a lot of that is flexible. They can pull back on advertising if they have to. Hopefully they don't have to in the next 3 years, but if they had to, they could remain profitable and continue building that recurring revenue. So it's a little bit more of an aggressive play. It's a smaller company, but I like the direction that they're at revenue wise, and I think that they could be turning that corner.
Yeah, it makes sense from a overall trend perspective too. I think people are looking to like not have so much interaction in an office with a doctor when you can get the same thing done, online with privacy in your home, have the stuff mailed to you. And it's really super simple to do. And we're not talking about complex medical conditions here. Like we're talking about just, does this happen to you? Then here's a fix. Let's try this. Right. And you pay them the money and move on.
Yeah. I think that this fits really nicely into a lot of the themes that we've talked about of consumers wanting to go directly somewhere like Hims, especially since it's digitally based. You don't want to go into a doctor and talk about hair loss. Right. Or your acne whenever there's a solution that Hims can provide from an online consultation or just an online order that you can resolve directly yourself. Like that's a no-brainer to me. Yep. And they've got the Gronk effect.
Yeah, Jack Gronk. Yeah, I love that. I didn't even know that, but now when I see what they're spending in advertising, I'm like, all right, that makes sense. Good for him.
Yeah. Right?
Yeah. Well, you would spend that much, Mark. That wouldn't bother me. This looks like the exact story that every entrepreneur that walks into a venture capitalist office tries to tell, right? It's like, well, we're going to keep spending more than we have as long as we keep growing revenue from 82 to 149 to 272 to 444. We'll figure out where this ends when we figure it out, and then we can pull back the marketing and get profitable at much higher levels than we're at today. It's got that hockey stick effect. So I think that's really interesting. Like you said, right now, growth/tech or whatever you want to call it, so out of favor that the stock is super depressed and has a chance in the long run to be a big winner. It could also be a zero. I mean, the market could be right, and this could, ultimately not shake out, but from a multiplier effect, I think this has got that potential.
For sure. Yeah, I do 100 of these types of trades, and over that time period, you'd be up.
Yeah.
This one, we'll see. It's a gamble, but I do like it as a expected value or whatever. I think it's definitely positive.
All right, cool. Well, that's our three stocks. We've got Coinbase, we've got Hims and Hers Health, and we've got Pinterest.
Yeah.
We've got three different ways to look at the world. All of them really growth stories, I think, in a market that's punishing growth. So I love it long term. We think all of these could be up multiples from where they're at today. Now, these are what we'll put out on our podcast and in a video like this. We try to do this once a month. Subscribe to our YouTube channel or our Spotify podcast or on Apple Podcasts. Hit the subscribe button. Make sure that you get these all the time. But also go to our website, LikeFolio.com. Get our daily drop email. You just fill in, all you got to do is put in your email address and I think maybe your first name. And you will get every day unique, powerful consumer insights that can lead to actionable opportunities in the stock market or elsewhere for free every single day. You'll never be charged for that. And I think it's probably in your best interest to get on that list because people love it. People
don't sleep on the daily drop. We've got hedge funds that eat and sleep. They love this stuff. I mean, they open it up every day. The read rate on that is super, super high. And you were talking about really, really smart guys and gals that read that. So it's definitely the most valuable thing that we do for free, no doubt about it. The daily drop is super.
And I feel like the topics are always just super timely. This is what is top of mind for all of us every day.
Yeah. It's our focus. So get on there, LikeFolio.com, check it out. Until then, we will see you on our YouTube channel or Spotify. We'll be back with another December edition. We'll see if we stick with this format or not. If we keep hitting and these keep, producing 10+% gains in 1 month, we may have to just continue until it stops working. But until then, we'll see you next time. Appreciate it.